What?
Starting out with some volatility and some chop. Some utility stocks taking a hit. We got some earnings. What is Warren Buffett up to with Apple? We could talk his earnings a little bit. The Dow changes. Who would have thought Nvidia was going to replace Intel? I mean, obvious, Adam. 8:35. Todd Gordon is going to join us, give us his fundamental technical outlook one day ahead of the election. Folks, it's a big week on pre-market prep. Get your cup of coffee, your pencil and paper. Get ready. Take some notes. Pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right. We got the charts up. We got the S&Ps up 10.5 handles, successfully defending Friday's low, which was also Thursday's low. That's our big level on the downside. You have the buck here. The buck is in the red, 64 cents. TLT, coming alive here, up $1.34, 92.18. USO making a big move off the headlines, up 217, 74.19. GLD up 70 cents, 253.17. The silver is up 38 cents, 29.92. And Bitcoin futures, they're down $445 at 69,285. Dennis, we are coming into the second trading day in November. How you feeling there, Triple D? Don't say tired.
No, it's one of those days where it's just stuff's not going as well as I would have hoped. It started really well last night, obviously with VKTX, being up 20% and, limit up on Robinhood and IB, and, that's leaked. And then, I've got other stocks just kind of one of those days where stuff's just not working out. So, I mean, we have those days. It looked like it was going to be a really good day for me with VKTX, and that's giving back a lot of the gains. So that's disappointing. But I've had some other trades here. Just one of those days where trades from myself just not working out that great.
You know why you're not tired, though, right?
That time change.
Yes, exactly. And
yeah,
let's bring
you do
in
change
AB.
them in Canada too. Yeah. So
AB,
it was actually very important, because my daughter played a 8:30 a.m. hockey game in Barrie, which is like an hour drive for me. So I was like, that hour really helped. So we didn't have to get up. I had to get up at 6 to go take her to the game, but it's like it was really feeling like 7 because of the time change. So it wasn't that bad. So that hour really helped me.
Okay, big question for AB here on Saturday night. Were you able to stay at the bars an extra hour?
That's a good question. I wasn't out Saturday night. I didn't realize the time changed until I was at the bar last night watching the Lions game, and I looked outside and it was dark at like 6 p.m. and I was like, what's going on? I was like, wait a second, did the clocks go back last night? I had no idea. But that is a good question, because I think they changed right at 2 a.m., which is when the bars normally close. So if it goes from 2 a.m. to 1 a.m., or it might go from 3 a.m. to 2 a.m. I don't know. Someone in the chat can help me out. But I have been in that situation before in years past, not this year though.
All right, you want to start with the Friday stuff, the after hours stuff, or the big?
Yeah, let's start with big news.
Friday is everything. Friday was really everything.
So Berkshire Hathaway continued to sell both more Apple shares and Bank of America shares. So now Berkshire has officially cut its Apple stake down. It dumped about a quarter of its Apple position in the third quarter. So now I'm looking at an updated Buffett portfolio tracker. He still has about 23.5% of the publicly traded stock in Berkshire Hathaway's portfolio is still Apple. So it's still a huge position for him. He holds more than $66 billion worth of Apple still, but continued selling Bank of America shares as well. Bank of America, similarly, he has $32 million worth of Bank of America. It's about 11.2% of his portfolio there. So still holds a lot of Apple and Bank of America, but continuing to trim those stakes. Also slowed down buybacks of the Berkshire Hathaway stock there. So I don't know. I mean, if you're just holding Berkshire Hathaway, I guess you have faith in Warren that he knows what he's doing here and selling these stocks.
I mean, we knew he was selling more Apple. This was the most, like we saw all the filings, and he fell under 10%. Then you have to see the regular filings anymore. But we knew he was still selling. So this is not shocking news here. Like people come in, why isn't Apple down like $5-6? I'm like, everybody knew he was still selling stock. He'd been selling, and this is Apple, the most resilient stock of resilient stocks. It's had lots of bad headlines and continues to hold up well with its, nosebleed valuation to itself, because, it's really, as high as it valued as it's been in, as long as I can remember. Bank of America, we knew was selling more too. So these are muted responses really to this. But, taking it away from Berkshire, because I don't think that's the main story of the day here. I mean, Friday night, so that would have been Saturday's story, but Friday night, there was so many major stories moving headlines. And it started with the biggest headline being Nvidia coming in and replacing Intel in the Dow. And Nvidia traded up. It actually was very interesting because it didn't trade up instantly. Like I tweeted it out. It didn't trade up for like 7 or 8 minutes after I tweeted that. So it took its time. Like it wasn't like algos were all over and we're just rip roaring and buying the hell out of Nvidia. They were hesitant off the bat. And, there's a lot of reasons for that. One, the S&P ads seem to be more algorithmic driven. Dow is more random. You don't know when that's coming. You often know on the Friday nights that the S&P ads can happen, but Dow, it just happens randomly. Also, it's like, I was quoted, by Chris Catchy, who's obviously, Benzinga writer, in the summertime saying this is like not a matter of if, this is a matter of when Nvidia is going to replace Intel. So, this is, very, very predictable that this was going to happen sometime. So you look at this and say, okay, big pop for Nvidia. That's great. The thing popped up to almost 140. Probably overdone because, yes, it's going to the Dow. Yes, there has to be people who are tracking the Dow to buy that stock. Yes, the Dow is a huge index, but we knew, the rating was on the wall that Nvidia was eventually going to go to the Dow after it split. So I think this is not shocking to anybody. I think that's why the response was somewhat muted.
Yeah, what time did it actually hit? Because I'm looking, I see the move. I went down to the 5 minute on it.
I tweeted it out.
Yeah, exactly. I
5
guess
o'clock, just after 5
5 o'clock.
o'clock,
Okay,
maybe
let's just go.
5:15, around 5:15 probably.
Okay, I had to. I mean, a lot of like it, and I didn't make a lot of comments on Apple and my technical comments here today. I will definitely be making them, but I think overall market direction is going to have a lot to do with the short term movement of stocks here over the next 48 hours or until we have an outcome from this election. But I think to make it simple, just as simple can be, you hit this all-time high in Nvidia. You had a little bit of a pullback. So you're getting a half back right away. 138, 139. It did trade up over 139. I don't know if those were crazy APM prints. And I look at
Yeah,
your
those are
high from
crazy.
30.
Those are the prints from overnight.
Yeah.
Overnight
So I
session.
mean, to me, if this gets a strong 139 bid, boom, you're back. You're going back and testing the all-time highs. Nice bounce off the, that low from last Thursday, along with the market. So figure your exact 50% retracement there. Have it coincide with a daily high, and can't give it 3-star resistance because it's Nvidia, but it's definitely a solid 2.5-star resistance.
Give an Intel number here too, Joel. Me and you still both long some Intel, and it's just, the bad headlines continue to roll out for this. It actually has had a pretty good day on Friday, and then bang, giving a lot of the gains back because it's getting kicked out of the Dow. Again, this was predictable, though, very predictable. And I sometimes think a lot of this stuff is like, so it's down a bit here. It's not a shocking, like, oh my gosh, I can't believe this happened. This is like the obvious trade. That's why I kind of think the Nvidia is leaking. And I wouldn't be surprised if the Intel starts to come back. I don't think this is going to be a big mover for these stocks.
Oh boy, Intel's kind of in the middle of no man's land. I got a weekly here. Let me see if I get anything more on the monthly. Point on the man, it's just I don't know, no man's land. I guess if you're looking for more upside here in Intel, obviously the path of least resistance has been lower here all the way since 21. But I'm looking at that. You got a little bit crazy on Friday, or with the news, and then 23.82. So major resistance at like 23.70 until this thing gets a buck away, until this clears 23.70, gets a 24 bid. Then I just think Intel's going to be Intel here and just chop around. But major resistance at that 23.70 area for Intel.
I'm going to stay with Friday night, AB, because this was the news that's driving today. It was all Friday night. So that was the big headline. But there was another headline. Let's start with Amazon. If we go over to Amazon, because we got Bezos here filed on Friday night to sell more stock. So if you were questioning whether the 200 Amazon wall, the Bezos wall, was going to break down and Bezos was done, he is not done. So he filed to sell. Do you see how many shares, AB?
Sells $3 billion in Amazon shares.
Did he sell it already? I don't think so. I think he just filed, right, to sell it.
It's the headline or the news article I'm reading says Amazon founder Jeff Bezos has sold over $3 billion in Amazon shares, according to a regulatory filing disclosed on Friday. This brings his total stock sales to more than $13 billion.
Okay, so the filing, and I'm in the actual filing, so I'm not sure where that article was from, but the actual filing is to be sold. So okay. I don't think this has actually been sold here. Correct me if I'm wrong. Like
Matt corrected us. Yeah, he sold 3 and selling more.
I think he's just not done. Obviously, he's getting to cash, spends a lot of money. He's one of those CEOs that actually enjoys life. So he's selling stock, and every time this thing gets to 200, he sells. So the Bezos wall stands. So, I mean, it's hard to buy this stock as long as he's selling. When he says he's done, maybe it's green light go, because Amazon is actually fairly cheap relative to itself. Just as much as Apple is expensive relative to itself, Amazon is cheap relative to itself, where I don't think Amazon's had a PE of 32 forward PE in a long time, and maybe ever. So, I mean, this stock is fairly cheap. So, but it's hard, Joel. I mean, you can do a technical all you want. When you got a whale sitting up there, continuing to unload, it's tough to be bullish.
But is this a little different? I mean, because is it 200 not held? I mean, because you did pop above 200. It seems like they do it, like they get it out of the way and it's done. Here it's like it really feels like he wants 200, like he's picked a price on it. And then if you got faked out and you bought that thing over 200, boom, you thought, oh, you're looking good. I'm a breakout trader. I'm buying this thing. Well, it went to 200.50, but then when those kind of moves, when you're trying to play a breakout like that, and it comes back down to that area, doesn't hold, man, you got to get out of the way. You got to absolutely get out of the way because of the of the people that are trying to play the breakout. So we'll see. There's a magnet there, 200 Amazon. He's picked his price, and that's just it's just a good call. Just be careful. You use it as a target if you're trying to play the long side, but don't anticipate that he's done. I mean, he could come with another 3 bill there, and once again,
I don't even think he sold it. Like, I think that article's wrong. Like, from the filing perspective, unless he sold it like he's selling it today, he's filed. The filing is, if we're looking, it's talking about to be sold. So it doesn't say titled class securities to be sold. This was filed, approximate date of sale. Maybe I'm wrong. November 1st. So it does look like date of sale. Maybe they did sell November the 1st. So he filed, and the problem is these filings show up late. So you get these filings and they don't show up immediately. So then they're in there. So it says approximate date of sale November 1st. So it does look like maybe it was sold. So, okay. I'm just reading it further in the filing. So it was to be sold, and now it says actually the date of the filing. Date of the filing is August 28th, 29th, 555,000. You see, it's the problem. They file these things. They don't hit the board right away. And then, I'm reading this on the fly too. Date of notice was November the 1st, and then it says date to be sold November the 1st. Approximate date of sale. So approximate date of sale. So I don't know. So it's still, the jury's out. There's 3. Did these 3? How many shares again? 3.
billion dollars,
16 million shares, $3 billion.
16 million
Right.
shares.
Another thing is, so I'm seeing right now that he's at Jeff Bezos owns about 10.8% of Amazon's outstanding stocks. So there's a chance he's trying to get below that 10% mark so that he doesn't have to file, every time he sells some shares. So if he does dip below that 10%, then next time he sells, it wouldn't necessarily have to come out until the next quarter. Because if someone's over 10% holding of the stock, then they have to file pretty much immediately. I don't know if it might be different even if he does dip below 10%, he might still have to file as like an insider. I don't know. But at 10.8% here right now. So he still owns, a bunch of Amazon shares. It's not like he's getting out completely. He's just kind of, trimming, taking a little bit off the top here and there. And he's got a lot of different projects and stuff to fund with Blue Origin and whatnot. But Amazon was in the headlines again on Friday for a different reason. This is going back to kind of the nuclear trade that we've been talking about. So Amazon had signed a deal with Talon Energy, and the FERC reject the nuclear power agreement with Amazon. And so you're seeing Talon Energy, ticker TLN, shares drop more than, or they were down more than $15. Now they're starting to come back a little bit, but some other stocks in this space getting hit on this news.
And this was the Friday night drop too. Everything happened Friday night, when people are like away from their desk, and a TLN, I had a trader text me and saying, come back. Like, you've got to see this stuff. If you're not here, come back to your desk because you got to see what's happening here. And Talon was down at one point Friday night. I think it was down like 25 points. So, and then this morning, it was under 150. So these are huge moves. You're talking about a stock that's been, fairly strong. And then you had, the sympathy trade, the nuclear sympathy trade, CEG, which reported, we can get to there in a second. You think, oh, CEG must have had bad earnings. CEG was down huge Friday night on this Talon Energy headline too. It was down to 245, and then it reported, and we can get to those earnings in a second. And obviously it didn't bounce back. But VST was trading down. Obviously, you got the CCJ trading down here now too. So you got the nuclear trade weak here too. This market overall, like, just look at what we just did this morning. Sometimes you just got to sit back, and analyze what we did. We got Buffett dumping more Apple. We got Bezos nonstop selling Amazon. We got the nuclear trade losing some legs here. We got the whole, vote coming tomorrow, and it's a coin flip right now. So, you're probably going to be contested. Like, when it's this close, it's probably not going to know who the president is Wednesday morning. And that's not going to be good for markets either. So there's a lot of reasons to look at this market and say, I don't know if I want to be all in here right now. Yes, seasonality is good. Yes, I was talking pretty bullish last week because it was like it was still set up pretty well. But as new information comes in, it makes you think maybe, just maybe, take some chips off the table. A lot of uncertainty entering this period here, Joel.
Yeah, a lot of red. The way things are setting up, tactically in the S&Ps, at least from my way that I do it, the market is starting out in, the S&Ps in a prove me kind of mode. Whereas the last couple of weeks, we were hanging in there until Thursday. If you look at the S&P, until Thursday, boom, we were right up here. Right, this is Friday. Thursday, we were still 58.50. When we were right here, 5,900, everything, everything's great. Consolidating to move higher here. And with that price action that you had on Thursday, the market is starting from a prove me point, whereas the weekly, it has to rally from here substantially and hold. The Bears won last week. There's no doubt about it. On a shorter term basis, the Bears won. Yeah. Now, it's just going to be the same scenario. Oh, we put in a triple bottom right here at 57.35, and we're just going to get a bid and just go right back to 5,900. But definitely you got to tip the hand to the Bears last week. Now, this week's a different story.
Just so much uncertainty, and maybe we can go into, give us the CEG earnings here, just because we were talking about it, AB, and we should give it because it was the major report really here from this morning.
Yeah, you look at any stock in that space, it's down right now. But CEG's earnings came in EPS of $2.74, beat by 6 cents, revenue of $6.55 billion, beat by $1.96 billion. So huge beat on the revenue there. And then the guidance, though, was slightly below estimate. So kind of a mixed bag in terms of earnings because they beat on both the EPS and revenue, but then the guidance came in slightly lower. But again, that wasn't really what was necessarily moving CEG because it was trading down already into the report. It was this rejection from the TLN Energy. And just to give some more color on that, so the reason the FERC, which is the Federal Energy Regulatory Commission, the reason they rejected the deal with Talon and Amazon, the FERC was concerned with the agreement's potential impact on the public, as increased capacity for the data center could lead to higher power bills and affect the grid's reliability. So they're basically saying, hey, this deal might be great for you, Amazon, but it's not going to be great for the general public. And I don't know where, like what state this thing was supposed to go in, but I know a lot of these, you know, like the Oklo plant they're building is out in Idaho. They're trying to go to somewhere that's, you know, not very populated. So I don't know where this Amazon one was supposed to be, but again, that regulatory commission rejected it. CEG's report, mixed bag because the guidance was lower, but you know, was trading down into it.
Yeah, and then you just look at even these smaller ones, like you said, Oklo's having a tough morning, NNE's having a tough morning. The nuclear trade is getting hit the hardest today. Like if you want to look at sectors that are just hammered today, the nuclear trade is getting hit the hardest. And a lot of money has been hiding here. Like there has been just a lot of money coming in. This nuclear trade has been real. It's been a fabulous trade for a long time, but you know, maybe it's tired and you get a headline here and this is a good excuse to take some profits.
And on the flip side, you know, staying in the energy sector, you're seeing solar stocks trading higher this morning. The TAN ETF is up about 1.5%. First Solar up about 2.5%. Enphase Energy is up about 2%. Sunrun up as well. And I don't think there's really any, you know, specific news in this space. I think it could be just based off like election speculation.
Yeah, election.
It's all election.
Yeah.
Which we should go into that too. That's a good
okay.
segue
Just
into
real
that.
quick, let's just take a look at these stocks because they're big movers and we got some big price action in them. These are really the toughest kind of calls to make here because what if you bought this thing before the gap, right? You know, 170, 180, 190, 200. I mean, you're still sitting on some pretty darn nice profits, right? So you're not, the last thing you're thinking about is, oh, I'm just trying to buy the dip here. You know, on the other hand, you know, buying the dip here, you only have one number to keep an eye on, and it was breached into pre-market. So we're above it right now, but I'd use this 233. I'd keep my head on a swivel there because once you get into this 233 area, you are going into totally uncharted waters here, gap in the area. So, you know, if you want to take a poke here, you're going to try and buy it at 37. This breaches 33, which I'm almost certain that it will today. Then let it go. But because there's no great support in it. On the other hand, people are going to be looking at, I mean, you know, let's say you bought it bad. Let's say you didn't buy it at 170. You bought it at 270 because you knew it was going to 350, 400. Now you're totally reevaluating the trade. This trade just got way ahead of itself from a prospective earnings viewpoint. Also, government regulation. Like it's like all these things are just going to go through. Like, okay, we're going nuclear. This is what we're going to do. Every nuclear stock is worth so much money. Government's not going to say anything. That's just not the way things are. And besides, after you get through the regulatory hurdles, then you got to actually translate it to make your money. Like AI. Like AI is great, but you know, how many companies are going out there and saying, man, we are kicking ass making some money from AI? You do have some like Amazon and maybe a Google a little bit, but so expectations just get so far ahead of the market. You got to be careful when those expectations are not met.
Chat wants to go to VKTX. There's multiple people that asked about this morning. It is one of the story stocks of the day. We did get the Sunday night data that we expected. It was great. The data was absolutely great. AB, if you've got it in front of you, you can just read off the highlights. Data good. Stock action. We'll talk about that in a minute.
Yeah, so I mean, there's a lot of data here. So basically, the bottom line was they released some promising obesity drug data. Cohorts receiving the drug, you know, reductions in mean body weight relative to placebo ranging up to 6.8%. Persistent weight loss effects were observed at follow-up visits through day 57, ranging to 8.3% from baseline 4 weeks after the last dose of VK. 2735 was administered. So there's a lot of data like this to go through in the document they released. But basically, again, the bottom line was just that the trial, the people that were on their drugs showed promising results on the weight loss. And you saw the stock, I mean, absolutely spike higher up to like $90. Then it's given up some of those gains here, still trading up about 4.5%. But then you had some analysts come in and give some ratings on the stock. So Truist initiated coverage, gave a buy rating to Viking. Stifel Nicholas maintained a buy rating. So the analysts are coming in liking this data this morning. Again, you're still seeing the stock trade up, but it was up much higher at one point over the weekend.
Yeah, lots of thoughts here. Obviously, I own a core position in VKTX in the long-term portfolio, and I did tweet this out. I'm like, you've got to ask yourself, are you in it for a trade or are you in for an investment? Because this VKTX pops and drops like it. If you look at the chart, the long-term chart, over the last year, we get these 15, 20-point pops, and then we get the drop, and then we get the pop and the drop, and the pop and the drop, and the pop and the drop. And that's what continues to happen with this. One thing to consider, and I talked about this on Friday, is we knew the data was probably going to be pretty good. They had talked it up on the conference call. We didn't have anything, but we talked about this, and that's why the stock popped from 60 to 80. It's like, oh, this data is going to be good. The data came out better than even on the highest expectations. Like, it was really good data. And, it was limit up, and you get the Robinhood traders overnight, and they just buy no matter what. They can't short stocks, and they just buy no matter what. The thing was bid up and limit up on Robinhood all night until 4 a.m. And then 4 a.m. comes in, and then you get some institutional traders probably coming in after that. You get some profit takers coming into that. You get some people who are positioned. There's a lot of people who were just long this stock because they had already kind of hinted that the data was going to be good. So it was a really nice pop, 22%. Do I wish I would have sold some? I didn't sell any. Do I wish I would have sold some? Absolutely. I did not. I'm averaged in from about $61. I've been in it a couple times where I've been in and out of it a couple times. But if you're a long-term investor here, the story got better. The story still remains intact. The valuation is still compared to, obviously, if you can get to a point where you can get an actual obesity pill to market, I mean, it's a game changer. You're talking about a $200, $300, $400 billion industry, and there's only really two main players in it right now. So I do think Viking Therapeutics is still a target. I think they're more of a target after these results. If I'm Merck, if I'm, Pfizer, if I'm, Amgen's working on their own stuff, but, if I'm Bristol Myers or any of these that don't have any obesity drug in the works, and you look at this, I think it's a target. So I'm in it because I think eventually somebody buys this thing out. I think it's well out north of $100. I think it's going to be a wild roller coaster ride. You can trade within a position too. Get in and out and in and out. And, and I've been trading it as well. I didn't have any stock on for a trade going into this, just a long-term investment, because I'm like, I don't know. What if the results aren't good? There was still a possibility it could have went down on the results too. But the results were pretty good. So you got to ask yourself, are you a trader or an investor? If you're a trader and your stock pops 20%, it's usually a good idea to take some profits. If you're a long-term investor, well, you're in it for the long-term story.
Boy, oh boy. There's a lot there fundamentally to cover, but for me, I'm just going to, the 90 never happened, or actually higher than 90. Holy mackerel. This thing got 90 something. This thing got 91.71. Holy mackerel. Can we build a bid here at 75? This is my case, for this stock. A little excitement last week, pumping up over 80, calming down at the end of last week. Couple highs here at 75. You've sold off pretty hard. So if the big boys still have an appetite, hey, how do you like that for this stock? And the institutions, people are still very positive on this stock. Take a couple days, build another base here, 74.5, 75. And then work your way back up for a real positive test of, this 75 to 80 level is just Swiss cheese. I mean, there's just nothing in here. So VKTX doesn't look like it's going to do it right now, but we'll see what happens.
It's really disheartening, to be honest, to see the trading action in this, and it's up $2 after it was up almost $20. It feels like a loser today, and it's coming down. I wonder if some people aren't nervous that they're going to do an offering too. Where you see these pop, and then they are burning cash. You got to burn cash to, that's their job. When you're a startup biotech, It's your job to
Mm.
burn cash for doing trials, and you got to fund those trials. And I wonder if there isn't some people thinking, well, it's, got good results here. It's going to take a lot of money to get them to the finish line. And it is, folks. They're going to have to do some more offerings along the way. The only other, the other thing is, you just don't know. Like, I don't want to be out of it. And then, all of a sudden a buyout happens. So that's why I was like, I've got to have a core position in this, because I've been talking about it forever. And I do believe somebody's going to buy it eventually.
Well, I just want to give you the flip side of this. Maybe this fad is over. Maybe this Ozempic, fat drug is over. And that, and Lilly got everybody that you can get on this. And then Novo, just
that's
like
insane, Joel. Sorry, that's just crazy talk. That's
oh, really?
crazy talk.
Well, look at Novavax.
Yeah, I'm not saying so. Stock action and saying that the whole obesity, is over is two different things completely. I mean, is Lilly overdone? I've said it's overdone for a long time. Does that mean obesity drugs are over? I mean, that's just simplistic, technical analysis spilling into fundamentals. I think Lilly is overbought. I think the stock has priced in a lot of, people continuing to buy that and very little competition. But I think to say that the obesity, that people aren't going to want obesity drugs in the future is crazy. People want the easy way out. So I think this industry, there's a no doubter it's going to continue to grow. The question is, does it grow with just two players? I don't think so. That's why I've said myself, if I was long Eli Lilly, I would have rang the register a long time ago. I think it's fully valued. So I think don't confuse, that, Lilly looks like it's breaking down, that the obesity drug stuff is over. I think there's this competition starting to come, or going to be coming eventually. And I think this industry is going to grow.
Well,
Joel's nothing to say. He thinks the obesity drugs are over.
I didn't say it is over. I'm saying the height of the enthusiasm and the
that's a completely different thing than you just
Okay.
said. So maybe you didn't clarify yourself, and this is why we banter. Me and Joel banter. But maybe Joel meant that. I agree with you. That hype, that you've gotta, that was way overdone, maybe, especially on Lilly. I mean, it's not Lilly. This is one of the biggest pharmaceuticals in stocks in the world that went from 300 to 900 in a straight line in 1 year. That move is absolutely insane for a stock like Lilly. And we've compared valuations. You're talking 40 times compared to 10 to 12 times for its peers. So, I mean, yeah, there's a lot of hype. There's a lot of excitement and a lot of people pricing in that Lilly is going to be the main player, and it's going to be them and Novo, and that's it. So I do think, as Viking has decent data, which it absolutely did, Lilly's down $12 today. I think there's a reason it's not just market effects that Lilly's down 12. It's that, oh crap, that's that pesky little Viking, that little $10 billion company that's got a drug that looks like it's, maybe just as good as ours. It's early though for Viking. It's early. Like again, to the chats, phase 2, phase 1 on the pill, phase 2, on their shot. I mean, we're early here yet. But, you've got to go through the phases. They're not getting, a drug, next week, next month, probably not next year. It takes time. But, if they continue to go on the way they're going, you could see an end result where there could be some competition coming eventually for Lilly.
All right, I did just see our guest of the day pop in backstage. Let's go ahead and bring on Todd Gordon from Inside Edge Capital. Without further ado, let's give Todd our very special pre-market prep welcome and see what Todd's been watching, what trades he's been making when we come back.
All right, we have Todd Gordon, founder Inside Edge Capital and tradinganalysis.com, a veteran Benzinga contributor. Todd, how you doing today?
Good morning, guys. Happy election week. What's going on?
So I do my scheduling weeks in advance, and I'm thinking, okay, the election, politics, technicals, fundamentals. Who would be the best possible person to have on the day before the election? And it was you or Gordon Johnson. It was you or Gordon Johnson.
You chose poorly. No.
Gordon Johnson.
Gordon Johnson.
He's always interesting.
I thought you were going to say Flash Gordon. Yeah, good morning, guys. What's going on? What do you think? I was just listening to your bit on just talking about Lilly and
obesity drugs.
Oh my God,
is it going away?
The obese? No, I mean the TAM on this is insane. You know, I hear what you're saying on the valuation with Lilly, and I was just checking it. What's the forward valuation on Lilly? What's 2025 expected?
I think we're like 37 or 38 times. So it's coming down. Like it was like a 1.70 or 80, but the earnings are going up so quickly that, you know, it's catching up. Let's go to the trusty Benzinga Pro. I can get you those numbers right now, unless you have it in front of you, AB. Maybe AB's already beat me to it. Forward PE on Lilly is 36. 36 times. 36.
Not bad. I mean, just the widespread application. It's not crazy. I mean, it's almost Nvidia uncrazy, and you know, with this growth. But like the Viking Therapeutics chart, that base is insane. Like it really looks like there's a lot more to go with such a small market cap. Like, do not take your eye off that stock.
I mean, it's a spec, you know, and that's what I've said to people. You know, I'm in it. It's still a spec. If they get to phase 2, you know, on the pill, and phase 3 on the shot, and all of a sudden, you know, the results aren't there, the thing could fall 60, 70%, you know, in a day. It can do that. So It's a spec. But the end result here, like, I mean, if they get, and this is why, you know, and I'll let you continue here, Todd, but, you know, I want your opinion on it too. I mean, if they could get a drug to market, you know, you look at Lilly, which tacked on like $400-500 billion, you know, in market cap because they got the drug to market. I mean, you got a $10 billion company that could be a $40-50 billion company in a hurry. I think that's why I like it, is that the upside here is absolutely enormous, even though there's a lot of risk.
And you know, I have to think, when I know we're going to get into the to the Trump Harris trade, you know, with RFK coming on with Trump, sound the alarm on the health crisis that we have in this country post pandemic. I have to think if Republicans were to come in and sweep, I have to think that would be on the margin negative for big GLP-1 companies like this, because I really think he's keeping RFK off of everything, all other of his agenda points except health. And you know, there's so many doctors that just want to just prescribe drugs to mask the symptoms rather than go right to the cause. And I hope just a health opinion that RFK comes in and is able to address the issue of diet in our country, and probably the same in Canada. But I don't know, that's probably a multiple steps down the road, or maybe a far reach, Dennis. I don't know what you think.
I just think people like the easy way out. They like the idea of taking a shot, and then I just don't feel as hungry as I was, and I don't crave all that junk that I crave every day. I mean, I just went through Halloween, Todd, you know, and like I see all this candy around me. Man, there's a Reese's peanut butter cup sitting on my desk right here. You know, wouldn't it be nice not to crave that? I'm not going and doing shots, I don't think, but would I take a pill? Would I take a pill? If somebody get a pill to market, I don't like the idea of jabbing myself in the stomach, you know, every day or every other day. But would I take a pill? Maybe. I don't know. I'm not hugely overweight.
I think more of you, Dennis. You're in good shape. You're thin. I don't know.
Not that.
I'm
215.
I don't know behind the desk, Todd. Don't be no. But Todd, let's
a little belly here.
Let's move on to the markets here.
Wait, what? Sorry, Joel. One more thing, and I'm watching HIMSS too, and this whole, you know, with the GLP-1 shortage on that, like HIMSS came off. I still hold HIMSS. I still hold Lilly. I'm watching this guy come back as well. I just wanted to put that in. Sorry to interrupt, Joel.
Well,
next.
I mean, it's not as easy to get the like people are abusing the drug and coming in and wanting this drug, and they have no, you know, no, really, they're not overweight. They just want to be a little bit thinner, a little bit nicer. So the insurance companies, one thing that you got to keep in mind is the insurance companies are going to be cracking down on this. This is a big toll on them. So that's just another thing. That people using it for the right purpose is one thing, but people using it for cosmetic purposes is another thing. But
no, it's a good point.
Let's go back to the markets, Todd. Here we are. Nice sell-off last week. Always like to see the Friday, Monday action. What we saw was a double bottom on Thursday. It's being supported today. So pulling back from the all-time high, just a nice little correction here and just going to mount after the election, go back to 6,000? Or do you feel like, maybe we need a little bit more of a pullback?
I'm just struggling. I'm pulling up all these different windows here. Let me see here. Do you want me
You
to
can
share
share.
screen? Or
Yep, I'm going to
okay.
stop sharing.
No, okay. Let me see. Do you want me to get into the first thing Monday morning in election week? Do you want me to get into the gory wave and fib stuff, or do you want to keep it high level?
I'll let Dennis decide.
No, whatever you want to do. I'll go in.
Okay.
I'll go into the fibs. I like
All
the 50%. There's I always say support resistance trends and retracements. That's what I like. So you want to get into the fibs?
I'm just gonna give you the bottom line nitty gritty. I'm not gonna hide anything. And I'm forever an Elliott and fib guy just to time and the technicals to get market context. Like there's two scenarios I'm looking at here in the S&P. So this is the S&P daily. And there's no doubt, even if we take all the labels aside, I mean, we're scraping the upper end of a channel from the 22 lows, right? We have pretty significant momentum divergence going on here. We had late 23, really high RSI in the daily, summer 24, right before August sell-off, really high RSI. So there's two scenarios that I'm laying out with our wealth management clients and our research clients. I think regardless the way the market's acting, the odds are some kind of pullback, either relief, just profit taking into whatever political combination unfolds, or if there's uncertainty and we don't have a president, we don't know. I think there's potentially a sell-off coming. The other thing I'll note that the VIX, how like pescally, that's not a word, but I'm just going to use it.
I like the word. We invent words on this show.
Like, why is I know why, but if you notice, it's just 21, 22, 22 and a half bid. Like that's high for the market. What, 2-3% off all-time highs. And it's clearly the election, right? So is it pricing in uncertainty, an uncertain outcome? Is it profit taking coming in regardless of what happens? Like longer term, I'm very bullish on this market. I like where earnings are. I like where rates are. I like where the yield curve is. We just got to get through this insane political environment. And then if we can get through it and then look right away to November 7th, which is the next Fed meeting. But, I think I'm starting to prepare for a move down to 5,400 to 5,200. Or if we don't, if things go really sideways, I just can't help but think that we never tested the late 22 breakout level at 48.20 or so. Like, do you guys, and I'm asking you guys, like, do you have a problem that we never really retested that breakout level in the S&P? We did in the NASDAQ, but not in the S&P.
Joel, I'm throwing that one to you. He's the technical analyst.
I don't really have a problem with it because because I waited for a lot of gaps and a lot of retests to happen, and they never happened. So that's just my overall opinion. I mean, I try and look at like what a little bit more forward. Like, can we hold last week's low, and if we don't, where are we going? But like going that far back and saying, I wish we would have went and tested that. I just that's just the way I like to look at it.
Okay. So what I'm laying out with our research and our wealth management customers and those who want to hedge, that using the wave model, which is not perfect, but it's a great way just to give me guidelines and framework. And it's not the grail. Nothing is, right? But I feel like in either scenario that I'm laying out, if things go sideways, generally the market drops sharply on whatever the initial catalyst is. We rally to a lower high, false hope, people trying to buy the pullback to then go get stopped out, blah, blah, blah. So I'm wondering if there might be on any kind of downward adverse reaction, 5,600 down into the 5,000 mark is something we need to be concerned about in the next month or two. And
what's the catalyst, Todd, that would take us there? Like,
I don't know.
Election uncertainty, maybe? Is it like China, fears geopolitical? Like, I always think about, and I love having, targets, and, I look at the charts to think about where we're going, but I often start with what's, on the horizon. Like, what are we not seeing? If you're seeing a significant correction, it's got to be a catalyst for that too.
What if the election goes smoothly? There's no protests, there's no horrible events, and it's smooth. And
that sounds impossible.
Democracy unfolds as it should, and then the Fed comes out on Thursday and says, you know what, maybe they come out really hawkish and say we're in pretty good shape, and maybe, let's say Trump comes in, he's viewed to be pretty inflationary because he's a protectionist. He wants onshoring, reshoring. You look at the outperformance in the small cap sectors to the market. Maybe the Fed can't be as dovish as they want to be.
I don't think the Fed has been as dovish as the market wants them to be, and that's why the TLT is continuing to just get hammered here. So obviously interest rates are a major concern for, bond traders, because they continue to hammer down the bonds. I mean, the stocks and the bonds are a completely different world. You got the bonds in like this 3-year relentless bear market here, and you got stocks making new all-time highs. I mean, there's a big separation here. I was always taught in school that the fixed income traders were smarter than the equity traders. So when I look at the TLT continuing to weaken, again, I know today it's bouncing back, but it's concerning.
You and I have gone back and forth on this. I'm trying this new Windows multiple desktop thing. It's kind of a pain in the ass, but I'm doing it. But what bond market? And I think, Dennis, you're way too smart of a trader to just blanketly say the TLT is the fixed income market. I mean, we have now yields, but now we have real yields and nominal yields because we haven't had inflation in most of our careers, right? Now we have, so one, you got to look at where real yields are factoring in inflation, and two, look at the yield curve. I mean, the 10-2 yield curve came out of inversion.
Yes.
August, we rallied up to 30 basis points of, let's call it, normalization. We sold back down to zero, came back. So we have the yield curve coming out of inversion, which means the 10-year yield is going up. Let me think about this. It's Monday morning. The 10-year yield is going up faster than the 2-year yield is going up.
Which is what normal markets go into. So, and Jim Tassoni, who was on this show about a month and a half ago, gave this argument to your point, Todd, which is a fabulous one, by the way. It's that we just need to normalize. We need to get, away from this short-term rates being higher than long-term rates. That's just not normal. So he actually was short the TLT, saying, that this sell-off in the long-term, bond and long-term issues and long-term rates going higher is actually just normalization and potentially maybe healthy.
Right. So, okay, fine. I mean, if we went below 3.8 or 3.7 in the 10-year yield, that's a problem. And I think the algos and all the guys were programmed in, saying, lower yields, higher TLT, buy stocks. Like, if we're below 3.8, 3.7, like, that's sending the wrong message for where inflation expectation is, even with the Fed on a glide path lower another 100, 150 basis points for next year. So I'm glad long-term rates pushed up. We went through 4s, we went through 4.2, we're coming up in 4.3, but just to put the technical hat on, and I don't put too much weight in technicals of rates because it's a manipulated market, but you've got the backside of this uptrend from May of 23. You've got this little capper up here, a double top. You've got a really nice intersection of resistance trend lines, plus 786, which is the retracement last resort, right around 4.45. So we have another 15, 18 basis points before there's a ton of resistance in the 10-year yield. Now we just need it to stop going up, 2-year yield to gently drift lower. And that's perfect conditions for the yield curve to continue to normalize in a sane fashion. Now, why is gold moving up? Gold is clearly moving inverse of rates.
Yes.
Right? Gold is ripping. The dollar is into resistance as well. I mean, you can look at dollar index and clearly correlated. We've already had the dollar back up against, again, I like to use fib retracements, whatever, into 104, 105, and we've got dollar coming off. Now, I don't want to go off. I used to be a macro, FX hedge fund trader. The reason the dollar has been going up is you got to look at which currencies it's rallying against. And I know we want to talk about stocks. I just want to say this real quick. The dollar has been rallying against the yen. That's what's been driving the dollar up. The dollar has not been rallying against the euro. Okay, the euro has gone down less than dollar yen's gone up. And all that means is you look at euro yen, you look at Aussie yen, you look at CAD yen. Those are all of the crosses the yen carries. Because the dollar's gone up with this move up in yields, the yen carries are going back on. That is global risk managers funding cheaply overseas and investing in higher yielding, assets overseas. So it's a good thing because it's being led by dollar yen and the carry trades.
So the carry trade continues then. Like everybody thought the carry trade unwound on August the 5th, but this is probably not the case.
It's coming back on. And what everyone, I would say, and I don't, just because I lived it, I traded, FX during the global financial crisis. I saw the yen carry trade unwind firsthand. Like everyone's saying collectively, rates going up, dollars going up. This is a problem. Inflation, credit quality in the U.S. No, the yen carry trade's going back on. That's risk on.
All right, Todd, with that scenario that you laid out before, and let me see if I got your analysis correct.
Yeah.
In the way the bond market is acting, the market participants, the large market participants may be fearing is that you get a Trump presidency, impose tariffs and his other policies, which are inflationary, and then you abolish the Federal Reserve governor.
Wait a minute.
If I'm putting words in your mouth, then please correct me.
You guys are all going to think I'm such a weirdo, but I swear to God, I had a dream last night that I was talking to Rand Paul and his father, Ron Paul, about abolishing the Fed. I swear I had a dream about it. You're going to think I'm such a freak. No, listen, I think if Trump comes in, he's in favor, obviously, of deregulation. He's in favor of onshoring, reshoring. I have to think that EWW comes back in. And I know China wanted to come in and build a big plant in Mexico. Trump slapped tariffs. I mean, I don't think we can bring all production in the U.S. I think Mexico is going to be a big beneficiary. And I am also seeing large cap growth start to rotate back in. Can I show one more chart? Am I taking up too much time?
Of course. Oh yeah, no. This is why we hire. It's why we pay you the big money to come on days like this.
So I also like to use these relative rotation graphs. So basically the market rotates on a clockwise basis, and I could animate these if it wasn't a screenshot.
Bring those. Can you make that bigger? I want to see what
yeah.
Let's just show that rotation like all around and talk about that for a second. That's
so
cool.
Well, I have it. If you really like it, I can take a second. I have the real chart below here, and I can show you how they move. It's a really cool. It's one of the best ways to look at actual sector rotation. This is the chart.
Yeah.
So if you look at it, I can even do you one better.
Sure.
Just a real quick note on this. Todd pulled this up last time, and I emailed him. Todd, I've seen this before. I know I've seen this before from one of our guests. And who is it? Trevor? What's the guy's name from overseas that we've seen?
Oh, Trevor Neal.
Yeah.
Yeah. He works with Julius de Kepenar. I just broke it. Yeah, relative rotation. So it's a really cool way to look at things. I just blew up that label. Sorry.
Okay.
So what we're doing here is I'm looking at a few different things. So this is rates, and this is the U.S. 10-year yield in orange, and this is the value growth ratio in blue. And as you can see, in 2016, 17, 18, we had U.S. yields dropping, value growth ratio declining, which means value underperforms growth. Growth outperforms value. All of a sudden, we got 21, 22. You know what happened there? Inflation explosion. We got a good rotation into value, right? Because value growth in blue is moving up as rates are going up, right? The valuation question with higher rates makes it hard to want to hold tech stocks, with the promise of big profits down the road. Well, all of a sudden, we got value growth sell back down, and we're at this triple bottom here. Rates, 10-year yields are trying to decide what to do. So as this long-standing relationship, is it trying to divorce itself and diverge, are we going to get a break of this triple bottom of value growth, which means growth is further to the right, and you can see these things rotate around the corner. As you're moving in a clockwise fashion, growth is outperforming value. This is the monthly on the left. Here's the weekly. This is the last 6, 7, 8, 9 weeks. If we could get a hook back in growth this way, value, which is in green, goes this way, it's probably going to decide the fate of this triple bottom value growth ratio that goes back to the pandemic. And if you break down there, probably means growth is going to continue to outperform. The market is going to deal with, 4, 4.5, 10-year yields. The real yield is, call it 2.5, 2.75. And the economy can go on and do business on that because our real rates are still what they were 5 years ago, 2.5%, but we have an inflation back there. Companies can invest, companies can borrow. And I think, with Nvidia coming up, I think earnings have been awesome. I think the AI revolution is very much here. I think that triple bottom breaks and we get a clear rotation back into growth. And I think, the hedge that I didn't finish my point on the S&P, we can go put a 5,500, 5,000 SPX put spread on in January, February. I think it was like, I don't know. So it's a 500-point spread. You can put it on for 40, 50 bucks, so it's, you're risking 50 to make 450. So even if there's a 30, 40% chance of needing that hedge based on everything that I just said, I know we want to get into specific stocks, but like, I'm willing to take that high reward, low risk hedge for our clients, but also put ourselves in the position that Nvidia could be 160, 170 bid after they come out and report what, 50 billion in earnings. I don't know. What do you think they're going to put up there? So like, I'm still very bullish. I think hopefully if this election isn't a train wreck, we can get through it, focus on how hawkish or dovish the Fed is, and it's back to business.
Todd, what about a stock like Celsius? Have we just seen?
Yeah. Thanks, brother. I'm getting crushed in that. I hold it. I love it. Go ahead.
I'm in it too. And, I was saying the other day that it's like, when you have a growth stock that you start seeing some slowing growth, they get hammered a lot of times. That's what we've seen. But I don't think the story there is necessarily dead. Whereas, I've seen a lot of retail investors talk about it as if it's completely dead. I'm like, no, I think growth just slowed down a little bit and the story, got hurt, but I'm still in it.
I agree with you. I still hold it. I think my average cost is around 45 in our wealth management business. I have it in the growth. Who just upgraded? I think they put a $50, $58 profit target on it. I think the story is very much alive and well. They just secured a new distribution network. The Pepsi distribution deal is kind of strange. I think if we look at what the expectations are in Celsius, entire screen, number 4, I have expectations next quarter of, what are they going to be? So they're looking to only make 2 cents, which would be a 92% quarter-over-quarter drop and on a 30% drop in rate. So this quarter is looking to be very, very bad. So 30% quarter-over-quarter decline, 266 million in revenues on 2 cents of earnings. But to your point, like, you look at the growth once we get through this year, up to 98 cents in 25, $1.23 in 26. I mean, these are 25, 28% bottom line growth on pretty consistent 16, 15% top line growth. Like, the expectation is still there. We just got to get through this bumpy period. I'm with you, man. I'm going to stay with it. I think we do need to draw a line in the sand in Celsius. I drink it all the time. I think I don't know if you can tell.
Does it make you feel better?
I love it. It really does. Like the nootropics, the vitamin B6, B12, thiamine, or whatever it is. Like, I think it's really good.
All right, they're throwing one more at you, Shark Ninja. I don't know. I haven't been following you on this one. Shark Ninja.
Yeah, I still hold this one as well. Stock's coming off hard. I don't like the break of the uptrend channel here at 89. Yeah. I'm going to have to manage. This one's come off, especially in consumer discretionary, which has done extremely well. I don't like the move on Shark Ninja. Earnings not received well. So we'll have to manage that one. But Nvidia longer term, man. I think, the one thing I would leave you guys with too on Nvidia, if that's okay.
Sure.
Nvidia is the only stock in Mag 7 that will not have reported following the election. So the implied vol is still quite high in Nvidia, and it will go up over the next 2 weeks with earnings. I just wrote an article on CNBC about this. Like, if you don't have Nvidia and you have FOMO, or what I call FEMI, fudge, I missed it. Like, it's a good time to sell puts, even if this is an adverse reaction to the election and you want to hold Nvidia, because we've already seen IV crushing the other Mag 6 stocks. So you don't have as much implied vol. I think that's something that you might want to look at if you don't hold Nvidia. And I still love the longer term play in Nvidia.
All right, Todd Gordon, you know him. He's a frequent contributor on Benzinga, founder of Inside Edge Capital, and tradinganalysis.com, joining us here for an extended session here. Todd, we're going to get you on one more time before the end of the year. So thanks a lot for coming on. We really appreciate your perspectives on the markets.
Guys, thanks so much for having me. I appreciate it, guys. All the best and safe trading and investing out there. Take care.
Thanks, Todd.
Thank you, Todd. All right, guys, that brings us to 9:02 a.m. Couple minutes long today, but we always enjoy our conversations with Todd, so we got to let him keep going there. I don't know. I mean, we'll be back tomorrow morning. I think we'll have some things to talk about, right?
We have a lot to talk about, and obviously it's all about the polls. We've got lists started, with Harris versus Trump. Benzinga is going to be working on that too. I mean, obvious ones. We know Harris. You see solar up here today. You don't have to ask, why is solar trading higher? It's completely the Harris trade, and obviously Harris moved up a lot over the weekend. There
you go. Well, we will be back tomorrow morning, 8 a.m. It is a T3 Tuesday. I believe we'll have, I had it earlier. I don't have it in front of me, but come back tomorrow for T3 Tuesday. They always send us some great guests there. And then, of course, it will be election day. The following day, Wednesday, hopefully in the morning, we'll know who the next president is. We'll be able to talk about the market reaction of that then. Till then, guys, stay green. Should be some increased volatility this week. We'll be back tomorrow morning, 8 a.m. We do have live trading starting up right after this, so make sure to stay tuned for that. With that, we'll let you guys get on with your day. Peace and love, y'all. See you tomorrow morning.